What's going on, viewers? This is CB Money coming at you from the Financial Daredevils YouTube channel, where we discuss everything finances. Please note, viewers, the opinions expressed in these videos are our opinions and views only. Please do not trade based off them. Always do your own research. With that being said, I just wanted to give you guys a weekly update on my Robinhood account. I'll start by Friday, where it was a dismal Friday. I lost $362.15 during trading hours, and then another $73 and change after hours. My week was pretty bad too. As you can see, I lost $1,383.28, or a little over 3% this past week. Dismal week in the market. Nothing really had any improvements except Johnson & Johnson, because they were talking about possibly having a human trial on their vaccine for the COVID crisis in September. CVS was up on Friday, but it was just a dismal week for me. With that being said, I wanted to jump into a couple things. The first thing I wanted to dive in and talk about is, as we know, that the president signed into law the $2.2 trillion stimulus package to help U.S. workers. Part of that was payments of $1,200 will be paid to Americans making $75,000 or less. Those checks, according to Secretary Mnuchin, will start coming out soon. I was reading this article. It talks about that the government is expected to distribute 60 million payments of up to $1,200 per individual during the week of April 13th, using bank deposit information from your 2018 and 2019 federal income tax filings. That $1,200 got me thinking, what would I invest that into? So in this video, I'm going to talk about 3 different stocks that I am going to potentially invest my $1,200 into. The first stock I'm going to start off with comes out of the telecommunications sector. And no surprise there, it's AT&T, ticker T. AT&T is an American multinational conglomerate holding company headquartered in Dallas, Texas. It's the world's largest telecommunications company, the largest provider of mobile telephone services, and the largest provider of fixed telephone services. As of 2018, AT&T is ranked number 9 on the Fortune 500 rankings of the largest United States companies by total revenue, and according to Morningstar, has a fair value of $39. So as you can see right now, it's currently trading below that fair value, and Morningstar is pretty good and dead on when they're putting in their fair value estimates. As you can see, we're looking at the 5-year chart, viewers, and it's pretty stable up until recently, but that's just about every company right now recently has gone down. Now let's talk about their dividend. AT&T currently has a dividend yield of 7.232, so just above 7%, and they currently pay 52 cents a share. They pay 4 times a year in February, May, August, and November, and have a payout ratio of 58%, which, for those that are unaware, a payout ratio is how much of the net profits the company uses to cover that dividend. So paying only at 58% of their profits to cover the dividend, they still have plenty of room to grow. And they've grown that dividend for the past 35 years. So that dividend is as one of the stable as they come, which in times like this, it's when the markets aren't doing anything but going down or staying flat, the dividends are going to be your only real source of gains in the market. 19 analysts offering a price target of AT&T have a medium target of $36, with a high of $53 and a low of $23. So the current price of AT&T is sitting just above $27, so it's definitely got some room for growth. And while you're waiting for that, you'll be collecting that beautiful 7% dividend while you wait. Our next stock, folks, comes out of the industrial sector, with industrial giant 3M, or ticker MMM. 3M is also an American multinational conglomerate operating in the fields of industry, worker safety, U.S. healthcare, and consumer goods. The company produces over 60,000 products under several world-renowned brands. They are headquartered out of Maplewood, Minnesota. 3M operates 80 manufacturing facilities in 29 different states here in the U.S. and 125 manufacturing facilities in 37 different countries outside the U.S. Looking at 3M's 5-year chart, as you can see, it's pretty stable. Doesn't fluctuate too much. It's one of those companies that when you put it in, invest in, you can just leave it there and not worry about it. As you can see, they've tipped off on the end just like everybody else. If we look at their fair value according to Morningstar, it's sitting at $186 for their fair value. Right now, the company is currently trading at $133.74, so plenty of room for growth. Now let's take a look at 3M's dividend. As you can see, viewers, 3M dividend yield is currently 4.264%, so just above 4%, and they pay $1.47 per share 4 times a year in February, May, August, and November. 3M's payout ratio is 64%. So just sitting again at 64%, the dividend's got plenty more room for growth to go up. And they're part of a special club called the Dividends Kings Club, which means they've paid their dividend and grown it consistently for 50 plus years. 3M is currently sitting at 61 years of growth consecutively on that dividend. Solid company. 8 analysts offering a price target of 3M have a medium target of $156.40 with a high target of $192 a share and a low of $143. So with 3M currently sitting at $133 and change a share, it's got plenty of room for upside. And again, it's another one of those stocks, while you wait for it to go back up, you collect a nice dividend yield of above 4%. Our third and final stock takes us to the healthcare sector, with healthcare giant Cardinal Health, ticker CAH. Cardinal Health is an American multinational healthcare service company and is the 14th highest revenue generating company in the United States. Headquartered out of Dublin, Ohio, the company specializes in the distribution of pharmaceuticals and medical products, serving more than 100,000 locations. Cardinal Health provides medical products to over 75% of the hospitals in the United States. Let's take a quick look at Cardinal Health's fair value. According to Morningstar, their fair value is currently around $60 a share. Cardinal Health, as you can see, is trading just above 46, so plenty of room to go up to that fair value. Looking at their 5-year chart, it doesn't look too pretty, but also it doesn't look too bad either. It doesn't really fluctuate too much. It's a great company that you can just buy and hold, and you won't have to worry about it. Now let's dive into Cardinal Health's dividend real quick. They currently have a dividend yield of a little over 4%, and they currently pay 48 cents a share 4 times a year in March, June, September, and December. Cardinal Health's dividend payout ratio is only just above 36%. So just sitting at 36%, they have plenty of room to grow that dividend over the years to come. And they've currently grown that dividend for 25 plus years. Solid dividend. One of those companies, just like the other two previously mentioned, where you can just buy and hold and expect that dividend every time it's due. 6 analysts offering a price target on Cardinal Health have a medium target of $58.33, with a high of $68 and a low of $51. And with Cardinal Health just sitting above $46, has plenty of room for growth. Again, like the other two companies, you can sit back and collect that nice dividend while you wait for the growth to come. Just to recap, viewers, the 3 stocks we covered today were telecoms giant AT&T, industrial giant and manufacturing giant 3M, and healthcare giant Cardinal Health with its 4% dividend. Viewers, thank you for tuning in and watching our video. Please hit the like and subscribe button. We greatly appreciate it here at the Financial Daredevils. Stay safe out there. Bye.